Before we get this video started, don't forget to give me a thumbs up for these little puppies. Say hi, guys. Give me a thumbs up. Say, give me a thumbs up. What's going on, guys? It's Investing Hustler here, and today I'm going to be talking about the S&P 500. I'm going to do a chart analysis on the S&P 500, and on top of that, I have a cool little clip that I found on the S&P 500. But before we get this video started, don't forget to give me a thumbs up. It really helps my video, so let's try to get this video to 100 likes. So we're going to look at this chart right now, and of course, right now we have the S&P 500. And let's do a drinking game. Every time I say S&P 500, you guys can take a shot. So as you can see here, right here, this line that I drew is the support line. We've hit the support here. We've went above it back in September 2018, and we're currently creeping up on that support line. So right now, a couple of patterns are coming into mind. One is the head and shoulders pattern. In that case, this would be the shoulder, this would be the head, and this would be the other shoulder. So if that were to happen, what we would see would be the S&P 500 go back down to this previous support line. Of course, this isn't the best head and shoulder pattern I've seen because we've broken below this support line. Usually with a head and shoulder pattern, what we see is a consistent support line. We see the shoulder hit the resistance here, go back down to support, go above the resistance, go back down, hit the support, and then go back to the resistance and so on. But in this case, we went and broke below this support right here, and we've made some pretty bad lows. We've actually seen the S&P 500 go down more than 15% in I think 21 days. I'll show you guys right now. So we've seen the S&P 500 drop over 20% from October 2nd to all the way to December 24th. And we almost immediately recovered all those losses because from December 24th to March 29th, the S&P 500 went up 20%, which is what we see that V pattern where we pretty much gained back everything we lost. I'm going to show you guys a video where we touch up on all these patterns. Another thing we could possibly be doing is we're making higher highs, because here we've made a higher high. We've reached about 28,671. Over here, we've reached a high of 29,038. And if we keep going for higher highs, we might possibly see the S&P 500 get closer to the 2,985, maybe even the 3,000 range, depending how high we go. That all depends how the market is, whether we're going to see the S&P 500 push to new higher highs, or whether we're going to see the head and shoulder pattern, and we continue to go bounce down on this support. And usually what you see with this head and shoulder pattern is you see it bounce off this support, and when it gets to the final shoulder, you see a breakthrough, and you will see it possibly go back down to this second support line right here. Best case scenario, we're going to continue making higher highs, which is what everyone wants to see. We would love to see the S&P 500 go above $3,000, reaching a new all-time high. That would be best case scenario. And then a not so good scenario would be the head and shoulder pattern, where we would go back down to this support, and then possibly after we hit that support, we might see a breakthrough below this support line, which eventually could start acting as a resistance line. So right now, the S&P 500, it's been let's look at the 5-minute charts, how it's been trading today. It's been trading sideways all day, pretty much just hovering below this support line right here that I've drawn. And maybe in a couple of weeks, we're going to find out whether it breaks above it or whether we start to head back down to the support line and form a head and shoulders pattern. For now, I'm going to play you guys a very interesting clip. Also, let me know what you guys think is going to happen with the S&P 500, whether we're going to push through to new all-time highs, or whether we're going to be forming a head and shoulders pattern and we'll be heading back down to our previous support. So far, if you guys are enjoying this video, give me a thumbs up, and I'm going to be playing the next clip for you guys. Also, I do want to talk about the S&P 500 and how they've been performing in the past year. If you look at the 1-year charts, the S&P 500 is currently up 9.78% in the past year. Since January 2nd, which is when the markets opened, the S&P 500 is up 12.9%. Since its December lows, the S&P 500 is up 20.6%. We have recovered very nicely from that crash. Another company I want to look at is Chipotle, which has had a huge run, an unexpected run. I was not expecting Chipotle to be up this big. In the past year, Chipotle has gone up over 128%. Since the December lows, Chipotle has gone up 84%. I was just amazed at Chipotle's gains this year. Had a huge bull run, And I'm just gonna say that I do expect a mild correction with Chipotle, but then again, they did have pretty decent earnings, which explain their run. But the reason why I'm bringing them up is because in the next clip, they will be talking about Chipotle and the S&P 500. So enjoy this clip.
The S&P just finished its best quarter since 2009. Not bad. You know, it's rare when you get large cap stocks, mid cap stocks, small cap stocks. Look at this, all up double digits, all up the same. The gains are broad-based, though. Technology stocks were the biggest gainers, up 21%. Industrials, which, remember, were dramatically oversold at the end of the fourth quarter on global growth concerns, they snapped back as well. They're up 19%. And energy stocks also were strong as oil rallied from $42 at the end of December to nearly 60%. That's almost a 50% gain. Overall, though, 90% of the S&P 500 was up in the first quarter. That's also a rarity. Bond yields moved up. Banks moved up as well. The calendar's a big help for the bulls. April is the best month for the Dow Industrials. It's been up 13 straight years in April, and the third best month for the S&P 500 after December and November. The calendar smiles on us.
We just heard, obviously, from Bob Pisani, it was the best quarter, Q1, since '09. Well, the preceding quarter, of course, was the worst quarter since '08. You get a big ricochet after a plunge. We heard that 90% of all stocks were up in Q1. 98% of all stocks were down in Q4. So we have this V, and that's the issue. Is the V enduring or is it not? But what we know it's done is basically return us to the level where the market has stalled out before. Right? So the actual equal weight S&P, as opposed to the equal weight couldn't even make the high. The S&P made a slight new high. And as I would draw the lines, I think basically we have been in the process of topping for the better part of 14 months. This reading right here, right, that's January of 2018, that was the highest weekly RSI ever recorded on the S&P, including 1929, 1987, 2000. And basically, we've really never progressed since then. Most sectors have yet to go back above that high, and most global bourses, with the exception of the Bovespa. So my own hunch is, right, is that we've had a nice rally, it's all very impressive, but that we have the risk of this kind of thing coming. And that it's not just this great off to the races kind of thing. And even were that to happen, I suspect it would be yet another trap, and that we would really have the ultimate in a topping out formation. Equities have been topping, the data's been topping, and bond yields tell us this. Anyway, let's pick some stocks. Here we go. So, two that are a little hot, a little overdone. American Tower, Chipotle versus the S&P. 1 month, you can see the spread. 3 months, you can see the spread. And 6 months. I mean, these are gargantuan winners. American Tower is a very important stock. We'll look at that at the end. But first, look at a basket of these two names. This would be the two combined $100 billion in market cap. And what essentially we have here is something that's basically off the chain. Yes, a 50, 60% move as an aggregate. Now look at the individual stocks. It's really the same circumstance. Here's American Tower. REITs are so important, of course, that we have a GIC sector now. This is the biggest REIT in the world. It has towers all over the world. We all use it when we use our cell phones. Almost $90 billion in market cap. And my thinking is, you take some profits here. Guess what? It was down today. Not many stocks were down today. That tells you no incremental buyers. We dropped more than 20% from an all-time high. That has only happened 11 times in the history of equity markets for the S&P. And yes, we've recovered, but now, just getting back to where you were, now it's proved.
So he's talking about the S&P, and clearly the defensive elements are hard to deny what's been working. But then you also have the stuff that really was kind of bombed out and is now or started to pick up some life. So I still think that materials, industrials, the rest of the world, it's hard to argue that that stuff which was really badly beaten down hasn't been leading a bit. And I think that's encouraging to me. I would stay in that trade.
So if you're new to investing and you only watch my channel basically because of pot stocks, then you might be wondering, what is the S&P 500? So it's pretty simple. All you got to do is search it up. And right here, the S&P 500, or just the S&P, is an American stock market index based on the market capitalization of 500 large companies having common stock listed on the New York Stock Exchange, NASDAQ, or the CBOE BZX exchange. That pretty much sums it up. There's 500 different large companies in the S&P 500. We can find out what companies they are. We'll go over the main ones. So pretty much if you were to invest into the S&P 500, you would be part owner of all these companies right here. For example, 3M Company. We have, let's try to find more common ones like Advanced Micro Devices, Adobe Systems, Activision Blizzards. We have Alphabet, which is Google, Amazon, American Airlines, Apple, Capital One Financial, Chevron Corp, Coca-Cola, Equifax, General Electric, Kellogg's, and many, many more. So pretty much it's the easiest way to have a diverse investment without you having to pick and choose specifically which company you would like to invest in. You would pretty much just be investing into what this is called an index fund, and you would have all these companies under your belt. It's probably one of the safest bets, especially for beginner investors. But that's it on the S&P 500. Anyways, that's it for now, guys. If you guys enjoyed this video, don't forget to give me a thumbs up. And if you're not subscribed, don't forget to hit that notification bell and smash that subscribe button. I'll see you guys on my next video. Bye-bye.